What's up, guys? Welcome back to the trading world. Today was Monday, April 7th, 2026. We're going to be quickly reviewing the NASDAQ futures market for today, reviewing all kinds of real trades you can take to make real money. If you guys like this type of content, definitely consider leaving a like, subscribing, following me on X, and checking out my completely free Discord. The link to that is in my bio. Cool. So, today was actually a really interesting day. There's going to be a lot of interesting ideas to look at and trades that you could have taken. Starting with one thing I want to say is if you guys are struggling with finding a very specific trade, a lot of the one of the easiest ways to find a very specific trade is to look for these 5 minute and 15-minute gaps, right? That you can tell the market's going to sweep liquidity into and then react off of. For instance, right? This one, I called this out live on my live stream and I said this 15-minute gap looked really, really nice because we had a data low here, and now you might be wondering, well, is that a data low? Because I didn't see any news. Guys, if it looks and smells like a data low, it's probably some kind of news event, right? So I am going to consider this a data low, and we have a 15-minute gap. And, well, what you can do is you just basically say, okay, 15-minute gap, sweep of the data low, we go higher. What's this up here, right? We have a 15-minute. This is what's called unmitigated, meaning we haven't used it at all. We haven't even used it one time, right? If it's not been used at all, it's unmitigated. So 15-minute unmitigated gap. And then look how precisely we fill this, right? And we reject price to go lower. So you can just see how the market just bounces back and forth between these gaps, right? It's filling inefficiencies. Like, hopefully you see this, right? Boom, boom, boom. And so what we want to do is we want to identify these 5-minute gaps, these 15-minute gaps, and then look for low time frame, change in state of delivery, inversion fair value gaps, outside bars off of these areas, or even pin bars, right? Look for those, any of those on the lower time frame out of these gaps, and you want to see a liquidity sweep, usually both of a higher time frame low. So, like for instance here, right? You want to see a liquidity sweep of this is a external sweep because it's like from way off on the left, and then I would consider this an internal sweep. So what's cool is external sweep of the data low, internal sweep of market open. And yeah, I called this as a soup. I called this as a soup. I said this we're unlikely to get through it on the first go. I was calling price like a book this morning. It was crazy. But yeah, lots of interesting stuff. So we'll look at first this one right here. So this 15-minute external gap. Once again, if you don't know what to do to find a specific trade, you just sometimes just find these external gaps and then look for the aligned time frames. Look for lower time frame confirmation that we're going to reject price. So here you can see a 15-minute unmitigated gap. Obviously, we're looking at the lower time frame. Here you can see it's efficiently delivered, meaning we completely fill the gap, popping above the high and then going lower. And so a trade you can take off of this is you can, so once again, with the aligned time frames, it's never going to be exact. So there's the default one, which is like 15-minute aligned with the 1 minute, right? But, go with what makes the most sense logically, right? In this case, I think it's totally fair game to align this 15-minute gap with a 15-second change in state of delivery. Boom, death candle down. We had a manipulation of the high, external sweep of external highs over here, meaning just highs way off on the left, and then an internal sweep, just meaning a lower time frame sweep. So we have both external liquidity get swept, internal liquidity get swept, aligned time frame change in state. Time and price are now aligned, and where do we go? Opposing draw on liquidity, market open low. Note we're above all of our true opens, and if you project out from body to body here, we go exactly for projections, which is pretty cool. So that's one way you could take that. You could theoretically also align this with a 5-second. This is very, very aggressive. But once again, aligned time frames are definitely they're not an exact science, right? You just kind of look for the lower time frame confirmation. So if it's a smaller 15-minute gap, I'll use a lower time frame change in state or inversion for value gap. If it's a smaller gap, yeah, I'll use a lower time frame. But if it's a bigger, wider gap, but it's like still only a 15-minute, I might use a even higher time frame change in state. So once again, there's the default ones. If you don't know the default ones, I can actually pull that up real quick. The default ones, you can access them in my Discord, right? The default aligned time frames, which is just you go to my Discord, right, or our Discord. This is all of our home. We all are on this grind together. Then you go to flow state, and then you go up here, and then you can see here are some of the aligned time frames. I usually use 30-second for the 5-minute. But back to what I was saying, we ricochet back and forth between these gaps. You can see even this one, right, in the pre-market, even this 5-minute unmitigated gap had its own reaction, right? Actually, I think it's better as a 15-minute gap. Even this 15-minute gap had its own reaction. So if you get nothing else out of this video, realize that you can just use these gaps as your basis for your trades, and then drop down, find your confirmation on lower time frame. For instance, once again, this is a 15-minute gap. Normally I would use the 1 minute to align time frames, but this one makes more sense with the 30-second. Right, we have external sweep here, internal sweep here. So we've got both. We get a change in state of delivery and an inversion for value gap. We get both, right? Boom. So what's this? Obviously this is in the pre-market, but still doesn't matter. Still a good trade. Right? 15-minute gap, 30-second change in state. Project out. I always project out usually from body to body. We go 4 projections. Bang. That's beautiful. You see that? Accumulation, manipulation, distribution. Put true opens on that, and you're gonna see how nice that really is, right? If I go 730, right, we're above 730, right? We're above. Let's see. There's probably a lower time from true open within this, right? But do you see how it's all accumulation, manipulation, distribution? Right, we'll just look at the 90 minutes. So there's 752.30, right? So that gets manipulated as well, right? So that's why true opens are helpful, because if we're getting and I think we had SMT with this high, so I didn't even journal this one today, but I'm just back testing it in the moment for you because I think it's cool, right? 730, it's we're above 730. And we're above 752.30, and then I'm sure that, you know, we manipulate the 22.5 minute one as well. But hopefully you guys can kind of see like what I'm saying with the market kind of like produces the trades for you. You just kind of have to make sure you're looking at the right things. So this is manipulation. We efficiently fill the gap, right? More confirmation when you completely come to the top of a gap, right? That's more confirmation that this is, you know, probably efficiently delivered, right? Because we've filled it. We filled the gap perfectly. Bang, beautiful. And then we go lower. So change in state, enter on either the close or the retest. Whoops, wrong way. Boom. And I put stop loss above those bodies, and then, you know, target 4 projections. 4 projections usually the textbook way to go. Or you obviously scale out, right? Next thing I will look at is right? I was anticipating this to be a soup, and I actually wish I had the live stream pulled up because I literally said, guys, I think this will be a soup of the data low. I said I think this will be a soup of the data low, and I said it's probably going to be Dark Phoenix. So I have a video explaining Dark Phoenix that's members only, but I'll just really quickly explain it. Basically, you'll have a rejection block, right? Oh my gosh, why is it being such a weird color? You'll have a rejection block, and right, if we're getting Phoenix model on the S&P, meaning we're getting S&T, and S&P is pushing into its rejection block, making this Phoenix model, right? So I could pull up actually, I'll just show the screenshots, right? So here's NQ. Here is ES, right? So we have NASDAQ souping this rejection block, which, by the way, it's a very specific data low. It's a very specific kind of low. It's a data low. Phoenix model is going to occur really, really well with market open rejection blocks and data low rejection blocks. So what does that mean? That means you're going to get a lot of times where one asset is going to push into the rejection block and not take the data low or the market open low, and the other asset is going to soup it. These soups of market open lows and data lows are super, super common. And so once again, if I see S&P, which is using the midpoint of its rejection block to get orders filled, I call that Phoenix 0 because the normal Phoenix is the top of the rejection block. So this one is the midpoint and actually even the 0.25. That's getting orders filled. We have stacked S&Ts. So I know with going into market open with these stacked S&Ts, souping the bottom of this rejection block. So that's what Dark Phoenix is when you basically soup a rejection block while the other asset is having a Phoenix model, right? Soup, note we're below the true opens. And I called this live, by the way. I did. I said we're probably going to get this as Dark Phoenix. And just aggressive expansion. And you don't really get an entry. The expansion is so aggressive you don't really get an entry. And why is that? Because smart money was already souping this low, right? They were entering with this soup because so there's really no entries. It was just very aggressive expansion after we had this. That kind of made it hard for me, but if you had conviction, you could have taken this as a Dark Phoenix, just a soup of the rejection block, especially going into market open. Once again, the fact that it's a very specific low, it's the data low, gives me a lot more conviction that this is going to be a soup, right? Basically, Dark Phoenix, when I say it's just a soup of a rejection block with SMT. That's basically what I mean. So anyway, bang, S&T with the rejection block, we go up. Then, we come back down. Remember, we hadn't really filled that 15-minute gap. Then finally, we get the internal sweep that we were looking for. So let me mark this out here. Well, that's the wrong one. Right? So finally, we sweep out the data low, sweep out market open low. Once again, that 15-minute gap efficiently delivered. Now you'll see here that I have this marked out as FVG. It's just my nickname for a reclaimed gap. So a reclaimed gap is a gap that you've used more than once, right? So unmitigated is it hasn't been used. Reclaimed is now you've used it at least once and now we're reusing it. And then if I have it marked out as FVG, that means we've already reclaimed it once. So this is the second time it's been reclaimed. So we've already used it once over here off the chart. Then a second time, and a third time. So if it's been reclaimed 2 times or already being reclaimed 2 times or more, it's a supercharged gap. I think I said that right. Anyway, in this case, aligning this with a 15-second change in state retest, boom, right? You can see this is also 2022 model, right? And I called this out live as well. I said, hey guys, we got a liquidity sweep, then we started getting displacement above an old high. This is on the 15-second chart, by the way. So liquidity sweep of market open lows. Note how both of these lows are specific lows. Specific lows. This is the data low, very specific low. This is market open low, very specific low. These are reasons why I'm going to have so much conviction in this specific 2022 model going into the future, right? Because it's very specific external sweep, very specific internal sweep, 15-minute for value gap efficiently delivered. So I know this is a pretty high probability 2022 model. We tap from measured out from here to here, we tap 0.705 really nicely. Bang. We run back up to the other side, back up to market open highs, hitting 7 projections. And then, yeah, obviously, it was hard to get an entry. Like, I'm going to be honest, when we went straight up, and then I could have looked for shorts. I could have looked for shorts off of that 15-minute unmitigated gap, but my bias was bullish. I didn't really like that. Then longs in here, like I was saying, they're definitely more difficult. Then I was looking for the first center for value gap to inverse. We closed too high. So it was really kind of tricky for me to get an entry, but eventually I got an entry in line with my bias, and I'll show you that real quick, and that'll be the last thing I talk about, right? So the entry I took was my first strike model, where you take the first center for value gap, you have this marked out all day long because the market's going to interact with it all day, and you look for I can't remember if I'm including outside bars in it or not. I don't remember. Anyway, you look for a change in state of delivery, an inversion for value gap, outside bar or pin bar off of the first center for value gap, and you just have it dragged out throughout the day, and the market's just going to interact with it. So boom, right? So here it is. You clearly see the market. I'll show you it on the low time frame, right? So there's that first center for value gap dropping down to a lower time frame. The trade I took was basically once again, I was bullish, so I actually really wanted this. I think there's a data high all the way over here. I don't know where it is. Was it right here? Oh yeah, I really wanted that data high actually. This one, but we did not go to it right away. But anyway, I was bullish, so I kind of stayed in line with my bias, right? And you can see there's multiple first strikes here, right? What do you need? It's basically flow state, but with the first presented for value gap. So it's usually going to be super low time frame. So like either like a 5 or 15 second is most common with this, right? So you can see it occurred actually at 9:45. Whoops. It occurred right here. And usually you want to measure out 4 projections and 7 projections. So there's 4 and there's 7. So you can see 4 gets hit. Right? 4 gets hit. 7 gets hit. So this is a 5-second change in state, entry on the close. You could have also entered on the retest. Then you would have actually hit 7R, which is nice. 7R there off that retest. 4R here off that retest. And then here you can see my trade. This basically the same exact thing, except just a little bit later in the day. Once again, my bias was still bullish. We got a liquidity sweep, change in state. I said, this is pretty nice, guys. I said, I really like this trade. Change in state. And right here, hopefully you can see the change in state. There's a tiny one here. That's a very aggressive entry. I like to wait for the most obvious change in state. So right here, boom. And then you can see we deliver up to, well, I had stop loss all the way down here because I was a scaredy cat, I guess. But in reality, stop loss should be probably at the end of the bodies. And then you can see we go up 4 projections. Like, just goes to show, like, you know, issues. If you suck at, like, if you mess up the trade, it's usually your own fault because the market's basically perfect, right? See how we went exactly 4 projections. So had I entered on the retest, stop, but where it should have been at the end of the bodies here, this would have been 4R in a matter of about 2 minutes, right? Right up to 4 projections. Unfortunately, I took this targeting this external gap here, and when I did that, well, once again, I had stop loss all the way at the low, right? Which I probably, didn't need to do, but whatever. And then I basically got half off at around 2R, and then I was targeting 4R, which is this external gap here. And we do not go and hit it, and then I got break evened out on the rest. Once again, I could have even had stop loss here at like the liquidity sweep, and I still would have hit 4 projections. So yeah, you really have to mark out your trade, your TPs, and your stop loss pretty exact to make sure that you take the trade according to your back testing, right? Because had I taken it with a stop loss right here, or even stop loss right here, then I would have got filled for 2R and 4R, but instead I only got filled for 2R. So anyway, that's gonna about wrap it up. So once again, this is the trade I took, except I took it with a wider stop loss and I got stopped out the rest. But yeah, hopefully you guys learned something. Hopefully you found this video helpful. I want to make these more often, but I get super busy, but I do want to make these more often. And with that, I'll see you guys in the next one. Peace out.